Funding for Market Journal is provided by the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Roy Smith looks at corn and soybean markets. Lee Schulz analyzes the latest U.S. hog inventory estimates. Tamra Jackson-Ziems talks about corn hybrid selection. And Aaron Berger gives tips on preparing for calving. Roy Smith is our corn and soybean market analyst this week. It was a lively end to 2015 at Argentina's ports. Bloomberg reports the country shipped so much grain and oilseed in the final days of the year that it doubled the amount exported during the whole month of November. Policy reforms there helped move stocks, but Reuters says the government was disappointed the volume wasn't higher. Here in the States, the U.S. Department of Ag is preparing to release its January crop report. Those estimates are slated to come Tuesday at 11 a.m. Central Time. We talked with Roy the afternoon of Wednesday, January 6th, and started by recapping current price movement.
First of all, it's been very disappointing that we really didn't get much of a dead cat bounce. You know, one day we had a market that actually followed the criteria for the dead cat bounce, but then the next day it was gone. And I don't know whether you consider that a true move or whether that was just a hiccup in the markets, but very disappointing. And we've got the prices of corn and soybeans both at levels that are not going to make anybody any money, maybe preserve some cash flow, but that's about the best we can hope for.
What are your impressions based on long-term charts about where both these markets might go?
It's real easy if you look at the long-term charts to get kind of bullish in the corn and soybean market both. And the charts that the University Extension people did for those marketing workshops we had in December, you look at that and you see in both corn and beans a gradual uptrend starting around the 1st of October and going through approximately the 1st of April, sometimes a little further and sometimes not quite as far. So you look at that and you say, wow, there's a good chance that we're going to get a rally just based on the seasonals. Right now it's hard to see what would cause that, but you know, it may just be such a thing that we've run out of people to sell. You know, the speculators have sold all they're going to, and the hedgers have sold all they're going to, and sometimes that's all it takes, and we hope that's the case this time.
If you don't have to sell then for short-term money needs, would your thought be then to just kind of ignore the markets for a while and wait?
I think so. You know, we raise the crop to sell, and we need to generate cash flow. Everybody is going to need to generate cash flow, if not to pay the year-end bills that we had here, at least going into February, March, April time period. We're buying fertilizer and buying chemicals and so forth. So, you know, I hesitate to tell anybody don't sell anything, but right now, if you've got your cash flow needs covered for the end of the year, then I say, yeah, you're right. Don't sell anymore until we give the market a chance to work.
You do have one rule though that you follow, and that's not to sell beans in February.
Right, and that's a well-known rule and one that I stick with until it proves me wrong, like the dead cat bounce did. But year in and year out, February has never been a month for the highest price of the year. There's just the psychology of it. I mean, you look around here and we got a lot of snow, let's face it. and we're not moving anything, and the speculators maybe have gone south. I don't know, just grasping at straws here, but year in and year out, the month of February has never been the highest price of the year. And I don't see any reason why it will be this year, because we're at a point where it's difficult to go any further down than what we already have.
Historically, does that January crop report, which comes next Tuesday, have an impact on the markets?
Well, you'd sure think it would, because it is a measure of how much the harvest has been and how much we've got in storage. But if you look at those long-term charts, it's real hard to see any cause and effect. And I guess my thinking is that if you need some cash flow, chances of prices, corn going up a nickel or a dime, are not that remote. The same with beans. Odds of the soybean price going up 10 or 15 cents. That might be a place to make some sales if you really need to generate cash flow.
You mentioned those workshops, and I read about that in your article on agriculture.com as well. Do you find a renewed interest from farmers to come in and think about making a marketing plan?
We had good turnout at the workshops that we had before Christmas, and it's hard to be real optimistic right now, but we're going to be farming next year and the year after that, and so one of the things it's good to do this time of year is weigh your alternatives. What are the possibilities? Do I want to sell forward contracts? If so, when do I want to sell them? Do I want to buy put options or implement some kind of option strategies? And we've got time to work on that now, and time to consider the alternatives. So I say one of the best uses of time is making those marketing plans for 2016, for the next year.
Next week, we'll look at the USDA's January crop report and its impact on corn and soybean markets. We also have a look at hog markets this week with Iowa State Extension livestock economist Lee Schulz. The USDA's latest inventory report shows the highest number of hogs and pigs in the U.S. on record. Estimates on December 1st put the tally at 68.3 million head. The country's farmers produced 10% more pork in November than the previous year, and supplies in the freezer are still high. December's cold storage report revealed a record amount of pork for the month, with data first recorded in 1915. We talked with Lee Tuesday morning and began by asking for his impressions on the latest quarterly Hogs and Pigs report.
Well, I don't think there was too many surprises given what pre-report expectations were. We really were looking at a large inventory, record large inventory in many cases going back to 1988 since we started the quarterly estimates. If we've seen some surprises, I think they really came about when we looked at the number of sows farrowing and the farrowing intentions. We're quite a bit lower than pre-report expectations. Now, when we really made up for the number of sows farrowing in the September-November period, given the productivity, looking at that pig saved per litter category. So really the pig crop, while it was down 1.2%, we made up for quite a bit in productivity. And so, overall, I think suggests that we are going to have larger supplies in 2016, but not any real major market movers at this point.
Of course, one of the things that's limited supply dating back a while now is PEDV. What's been its impact so far this winter?
We've really seen a very minimal impact. There has been a few isolated incidents. I think if we look at the impact of PEDV, I think it could look maybe like the 2014-2015 period, where maybe a little bit of ramp up in incidents as we go in the winter and spring period, but nothing like we've seen in 2013 and 2014. So really, I think there's really going to be very little, if any, impacts on pork production and inventory numbers due to PEDV.
Let's talk about demand. First, domestically, what's the environment right now in this country for pork?
Well, if you look at pork demand in general, it has been very stable and very strong, really dating back the last several years. I think the last 12 quarters, year over year, we've seen positive demand, and that's really not too surprising given what pork demand has been historically. I think when it's important to really look at the global demand picture for pork, a lot of the discussion this last year has been due to the strength of the U.S. dollar. If you compare it to Canada, up 19% inflation compared to year ago levels, and that really has hurt our pork demand. We're still only down about 0.5% from a volume standpoint, but we've actually made up quite a bit of that the last couple of months.
What are we seeing right now for market prices, Lee?
Well, if we look at market prices, I think first it's important to kind of maybe compare to 2015, since we know pork production is likely going to be a bit larger in 2016. If you look at futures market prices, February, May, June, July, August, October, all trading lower than year-ago levels currently. If you're looking at market prices higher, we're staring at that April, December, and then February 2017 contract are currently trading higher. If you look at prices in the first quarter, right in that range of, I think, 58 to 63. Second quarter, maybe 71 to 77. Third quarter, 69 to 74. And then similar for the fourth quarter to the first quarter, about 58 to 63.
What are we going to see for break-evens here to close out 2015 and entering 2016?
Right now, I'm looking at break-even cost of production right in that $62 range. Right now, if you look on an annual basis for 2016, I think lean hog futures are in that $64 to $65 range. But also realizing there's going to be quite a bit of seasonality in there, where profits in the summer months you're looking at $14 to $20 in the summer months, and really currently in this first quarter $8 losses per head or so, and then in the fourth quarter maybe about $4 losses projected.
That tightness there, is that strictly based on market prices, meaning have producers been able to control costs with cheaper feeds?
Well, I think when you look at cost of production, it's not only, what prices are now, but looking out into the future, either this marketing year or the further marketing years into the future. We're right in that cost of production of corn in that $3.50 to $4 range. Soybean meal prices are in that $2.50 to $300 range, and really distillers grains in that $120 to $150 range, and that's quite a bit of consistency in that price, and I think that's really locking in that consistent cost of production there. And where we're really seeing the variability and what's causing fluctuation in profits is those changes in the lean hog price.
The USDA's first inventory report of 2016 is scheduled for release March 25th. The most recent estimates from the USDA's National Agricultural Statistics Service indicate Nebraska farmers produced a record corn crop in 2015. The total output is expected to be 5% higher than 2014, with a best ever average yield of 187 bushels per acre. At the Fremont Corn Expo held in Fremont, Nebraska Thursday, we talked with Nebraska Extension plant pathologist Tamra Jackson-Ziems about how corn growers can use corn hybrid selection to control diseases next season while also maintaining manageable input costs.
Well, hybrid selection can play a big role in minimizing losses that we have for diseases, depending on which diseases you're talking about. So we recommend that people work closely with their seed agronomist and try to position some of those hybrids, especially in fields where they've had some chronic issues in the past.
Which diseases might you look to target here as you're starting to select hybrids, or if you've already done it and maybe thinking about making a change?
Well, the one thing is you want to make sure you know which diseases you had and where they were, because almost all of the diseases that we have are caused by pathogens that do overwinter. And so if we have similar conditions, weather conditions, in 2016, it can guarantee that you could see those again. And so examples would be northern corn leaf blight, gray leaf spot. Those are probably some of our big key ones right now, because we really don't have good resistance to rust like southern rust, and that one does not overwinter, so we can't predict it as well.
How prevalent were those diseases, gray leaf spot, northern corn leaf blight?
Early in the season, in 2015 and 2014, we had cool, wet conditions, and they were very favorable for northern corn leaf blight. And so where we had susceptible hybrids, they were hit pretty hard in some cases. And so that's something to be aware of. But as temperatures warmed up, we still had the humidity, and then we began to see a lot of gray leaf spot. And gray leaf spot probably was the biggest overall problem that we had on corn.
Yeah, you mentioned weather. What role does weather play in helping or hurting these diseases?
Well, we want to keep reminding people that most of these, especially the ones caused by fungi, like gray leaf spot and northern corn leaf blight, they like humid or wet conditions. And that goes for a lot of other diseases as well, and the stress that they cause the plants. And so whenever we have conditions like that, you can anticipate that some of those same diseases will reoccur on some of the susceptible hybrids in the same fields.
Were fungicides effective this year?
We do have some favorable results with a lot of the fungicides in our fungicide trials, and we'll be sharing those today at the Fremont Corn Expo and at the crop production clinics for the next month or so, and then they'll be online as well, and so people can look at those and make decisions accordingly.
How effective can crop rotation be in helping to control some of these diseases?
Crop rotation is also an excellent way to minimize disease pressure. It gives the chance for the infected crop residue to break down and disintegrate into the soil, and that's where most of these pathogens are overwintering.
Any that wouldn't be solved by crop rotation though?
Yes, and actually we can't eliminate disease pressure with crop rotation or any of these methods individually, but in particular the pathogens like rust pathogens that don't overwinter here, they have to blow in every single year, and so crop rotation, hybrid selection, there's really not much we can do except monitor for its development and spray if needed.
Can you talk about rust and the treatments and kind of what it led to in standability in some fields?
Certainly. So this year we had a lot of southern rust move in. At least we had a high incidence of it, so we had a little bit, it seemed like, everywhere. In reality though, most places did not have severe southern rust and many didn't need a fungicide as a result. And so it was a surprise though that in our fungicide trials we actually had a significant impact of southern rust on standability and lodging. And so we also had a significant impact, again, like we've had in several other years, with fungicides improving standability, and so that's another factor to consider if you have lodging issues.
So we're also talking a lot this year about the tighter margins that farmers are facing. Is this a way that you can still monitor input costs by selecting hybrids?
Absolutely. You know, resistance to our diseases are not traits, and so it doesn't cost any more to select a hybrid unless maybe the hybrid isn't competitive as far as yield. And so those are things to consider, but hybrids do perform very differently to some of the diseases, and so know what you've got and select accordingly in working with your seed agronomist.
We'll have more interviews from the Fremont Corn Expo in upcoming episodes of Market Journal, including a discussion on corn production challenges in 2016 with Bob Nielsen from Purdue University. When Lancaster County farmer Jerry Lawton harvested soybeans this fall, he set aside 8 acres to go toward a special cause. Those 8 acres were rented by Raymond United Methodist Church in Raymond, Nebraska, and sold at a local elevator. But the proceeds will go overseas to help fund a project via the Foods Resource Bank. The project raises money to help farmers in developing countries grow their own food. You can read more about this mission to help fight global hunger in the January Nebraska Farmer. The calving season is approaching for certain farmers and ranchers across Nebraska. We recently talked with Nebraska Extension educator Aaron Berger about things producers can be doing now to prepare for the season, including a practice that might alter the timing of calving during the day. We started by discussing nutrition requirements for the cow.
As we think about right now, many folks who are kind of winter calving, those cows or bred heifers are in their last trimester right prior to calving, and that's really when their nutrient requirements significantly ramp up. Especially as we think about bred heifers or cows that are out on corn stalks, the quality of those stalks has probably deteriorated significantly from what they were back when we put those cows on in the fall. And also those cows are needing more requirements now. So we need to really be paying attention to their nutrient requirements, making sure we're providing adequate protein and energy to have them gaining the weight they need as that calf is growing within that bred heifer or cow really rapidly right now.
Is there a score that you'd like to get them up to as we approach calving?
Yeah, so as we think about a mature cow, we'd really like to see her in a mid-5 from a body condition score as she goes into calving. On these bred 2-year-old heifers, we'd really like to probably see them close to a 6, just because they're still growing themselves and they're going to be growing themselves after they have that calf, and so having a little more condition on those is going to give us an advantage as we think about moving into the spring and getting them rebred.
Okay, for calving specifically, what do you recommend supplies that farmers should have on hand?
Yeah, so I'd really encourage you to go over your supplies, make sure you have what you need on hand in terms of obstetrical chains, some sleeves. If you're using a calf puller, make sure that's in good working condition. Would also encourage you to review how you would assist a cow or heifer at calving. There's some good publications available at the beef.unl.edu website that explains some things to be aware of and how you might assist. Review with your veterinarian when you would like to call them or when they would like you to call them if you think you might need assistance. And so just reviewing those things can help you get prepared mentally. Another thing we want to do is go through our facilities. We probably haven't used those, obviously, since last spring, and so might want to think about making sure all the gates are in good working condition, lighting is in good condition, head catches, things like that are well in place. Another thing we want to have on hand is some colostrum, if possible. It's good to get that from within your own herd. There's also some really good colostrum replacement products available today that really have very similar efficacy to what natural colostrum does. And so if you don't have any natural colostrum on hand, would encourage you to visit with your veterinarian, identify those products that they recommend, and have some of that on hand as well, and that'll help you get ready for the calving season.
You said producers should also have a plan for warming calves. How cold is too cold? How can it affect the calf?
Yeah, so as we think about that calf, obviously when we get into situations where we have cold temperatures, that's a real shock to that calf, and so we want to be prepared to get that calf dried off and also give it colostrum if it's stressed. A good thing to purchase is a rectal thermometer, and if you're concerned about where that calf is at from a temperature standpoint, go ahead and get a measurement on that and know where you're at. In terms of warming those calves up, that really depends on how stressed they are. Oftentimes just getting them into an environment where we have some warm air and maybe it's a heat lamp, getting some colostrum in them can get them warmed up. If they're thoroughly chilled, where we've really dropped that body temperature below the mid-90s, then we might want to think about a warm bath to bring that body temperature back up, in addition to some warm colostrum to get them back to where they need to be body temperature-wise.
Finally, Aaron, how might you be able to alter the time of calving based on when you're feeding the cows?
Yeah, so there's some interesting research that's been done over a number of years that shows that if we feed those cows in late afternoon, early evening, that we can, in many cases, increase the number of calves that are born during the day. Physiologically, we're not exactly real sure what's happening, but may have something to do with the fact that when that cow takes on that load of feed in the late afternoon, evening, she's shunting more blood for digestion and rumen activity there. But there seems to be some data that would support that. In any event, if we need to feed and we can do it in the evening, might provide us an opportunity to get more calves born during daylight hours when temperatures are warmer, when they're also easier to be observed, and could be an advantage for us.
How soon does that need to start, Aaron? As in, how soon before calving do you need to move that feeding time?
Yeah, so I think ideally we'd like to try to get that done maybe 2 weeks before the start of calving, but you know, if we're ready to start calving, obviously not all the cows are going to calve early or right away, so going ahead and starting that as soon as you're bringing those cows up closer to where you're going to be observing them, I think is still beneficial.
On the Market Journal website, we'll link to more resources from UNL on this topic, including information on assisting cows at calving time. Now, with this week's weather forecast, here's Nebraska Extension State Climatologist Al Dutcher.
Well, folks, here we are again for the first forecast of 2016 for Market Journal. And during this last couple of weeks while we've been off with the university shut down, of course, we had a very aggressive precipitation pattern develop across the western United States in response to some El Nino-fueled storms moving in to the western United States. And a couple of those storms, of course, made their way into the center part of the country and developed a pretty aggressive storm pattern during the Christmas holiday period, particularly just prior to Christmas and following immediately after Christmas. Now, most of these storms over this next couple of weeks appear to take more of a southern path, something that we would expect during a major El Nino event. And in fact, if we look at El Nino statistics, basically when we look at the impacts from El Nino, the greatest majority of those impacts can be found in the January through March period, particularly if you get into the southern half of California. So we are seeing some significant relief. There's more storms on the way, and some of these will have a bearing not only on the western United States, but on the extreme eastern United States as these systems slip south and then move up the eastern seaboard. And the potential for a significant snowstorm as we move into late next week is becoming more of a reality. So let's take a look at the upper air models and see what we can expect as we go through this period. First thing I'll draw your attention to is this is your southern stream storm that moved from California and is now starting to move across the southern plains. And of course in the north, this is our northern stream energy that did generate some precipitation across the northern plains, and in combination with some of the energy moving up from the southern plains storm did generate some light precipitation, freezing rain, a little bit of sleet, and more in the form of ice and snow as we got up into the Dakotas. But as the system starts to move eastward, we're going to see the merger of these two pieces of energy into a single storm system that's going to move up the eastern seaboard. So as we get into tomorrow, you'll notice that all of a sudden all this energy comes together over the Great Lakes. Now we should start to see some fairly aggressive snow patterns across the western Great Lakes, translating toward the east coast as we get into late Sunday and Monday, and this will generate a large substantial area of precipitation over the northeast and also bring down some very significant Arctic air into our region. We may be looking at single-digit highs to sub-zero reading highs in northern portions of Minnesota and Wisconsin as this cold air moves in. So as we get into Monday, we start to see a relaxation on the southern extent of this cold air, but it's more directed toward the northeastern United States. So we'd expect some substantial precipitation in the northeast and some high accumulation snows. More importantly, we'll start to watch this ridge start to build into our region as we get into Tuesday and start to bring some warmer air in. So we get one last cold shot of air coming in on Tuesday that will reinforce the snow machine in the Great Lakes region, and then that will start to shift toward our east as we get into Wednesday, and you can see that system coming in for a second storm on Wednesday. This one doesn't look to be as powerful as the one this weekend, but it certainly will bring some messy travel problems, and of course the warm air starts to work into our region. So as we get into Thursday, we now have a ridge over the center part of the country, a little bit of nice warming, a little bit of a reprieve, but once again another storm starting to take shape over the southwest that's going to move toward the south and eventually up the eastern seaboard. So as we get into Friday, here comes a system across Texas, and as we go through the day on Friday, it will probably move into south central portions of the mid-Mississippi, lower Mississippi River Valley, and then start to shoot up the eastern seaboard as we get into Friday. So basically in the 8 to 14 day forecast, we're looking for colder temperatures across the southeast, but I think we've vastly underplayed the amount of cold that will be coming in to the northeast and north central parts of the United States. And this below normal precipitation trend from next Thursday to the following Tuesday is likely to be very underplayed, particularly from essentially Illinois eastward up into the northeastern United States. So a very stormy pattern for the west and the east, but in the center part of the country, fairly benign conditions.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, hog prices, corn hybrid selection, and calving preparations. As always, you can keep up with Market Journal during the week by following us on Instagram, Twitter, and Facebook. Next week, we'll look at corn and soybean markets after the USDA's January crop report. We'll also discuss U.S. ag trade with Darcy Vetter, the Chief Agricultural Negotiator at the USDA. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.